As I'm sure you've heard by now, Zillow is exiting the iBuying game. We're here to talk about whether there's an opportunity for you as a home buyer in all this. We're going to discuss whether this was logical, inevitable, if we should have known this was going to happen. Zillow CEO Richard Barton said the unpredictability in pricing far exceeds what they anticipated, which undermines their Zestimates, and one other thing we're going to cover. And this is also a mea culpa for the video I released just over a week ago about Zillow Offers. Hey there, Christian Walsh with Wire Associates. We're real estate agents based in Southern California, helping buyers and sellers and tenants and landlords navigate these crazy days. And we're here with a big update on Zillow Offers. We appreciated all the passionate comments in the video we released just over a week ago about Zillow Offers. Our video covered the fact that Zillow was pausing its efforts due to a lack of labor, a lack of being able to take care of all the properties they had. And then we ran through the number of properties that Zillow had purchased in Southern California and showed on LinkedIn the number of job offers that were out there. Now there were over 500 at that time, and there's 477 as of this shooting, and that's despite the fact that they say they're going to be laying off about 25% of their workforce. While we didn't fully express it in the video, we anticipated that Zillow was gearing up and not giving up on iBuying, and we were wrong. And again, we appreciate the passionate comments on both sides of this. Was it obvious or logical that Zillow would give up on iBuying? And the short answer, in our opinion, is no. It wasn't obvious or logical that that was what was going to happen. On the face of it, iBuying is a valid business model. You can buy directly from sellers and resell those properties for enough of a profit to cover your losses. That's what Opendoor has been able to do successfully. And of course, this business model has been around forever with flippers, We Buy Ugly Houses, etc. What it does require is that if you're going to buy the properties, you buy at enough of a discount from the seller and or charge enough of a fee, or a combination of both, so that you can remain profitable. Of course, it turns out Zillow wasn't doing this, and they were having trouble since the beginning, but it's not like Zillow, as a big publicly traded company that gets a bunch of venture capital, has to be profitable immediately. They can continue to throw money at something to see if they can get the thing to work. And unfortunately, they threw too much money. They had a problem where they weren't buying the properties at enough of a discount and or charging high enough fees in order to cover their costs. And this became very evident in third quarter 2021. Let's dive into the Q3 Zillow shareholder report. We have a link below so you can go ahead and take a look at this. So we're going to look at a few key things in here. Number one is, and I hate to be mean, but scrolling through, maybe it's too soon for this, I see this smiling family and I can't help but wonder if maybe this is one of the sellers that Zillow paid too much to so they could move. I know, probably too soon. So long story short, when you review this, you're going to see that pricing unpredictability is mentioned over and over, and that was the issue. What this does is it undermines what Zillow was founded on, which is essentially the Zestimate. And we'll talk about one other thing it undermines as well in the next section of this video. Once you get through the message from the CEO, Richard Barton, and we scroll down, it's very helpful to look at and see what exactly happened with Zillow Offers. So it really jumped the shark in Q3 of 2021, and we couldn't all know what was going on behind the scenes, but we can now. We get a better idea when we look at this release. We can see more about it, and what it boiled down to, this first sentence here, higher than anticipated conversion rates led to them buying more homes. And that should have been the canary in the coal mine right there. When you have more sellers saying yes to the offers, something's out of whack. And what it could mean is that the price they were offering was too high, the fee they were charging wasn't high enough, or a combination of both. And as compared to others, because if someone's reaching out to Zillow Offers for an offer, most likely they're also reaching out to the competition, including Opendoor and some others. So the fact that they were getting so many yeses from sellers should have been a warning. They should have slowed down earlier in the quarter and known something was out of whack with the algorithm. One other side note, and then we'll table this for discussion later on. I thought it was helpful to look at the costs and the selling costs in particular. It shows that 3.4%, and what the selling costs primarily are commissions. So the agent who brings the buyer was getting anywhere from 2.25 to about 2.5 in our area. And that shows there's a little tiny margin for the listing agent of 1% or less. So just interesting. We're going to table that for now. I know commission can turn into a whole huge discussion, but just wanted to point that out. Again, we have a link below so you can dive into this report and take a look at the numbers to see what happened, particularly for Zillow. This isn't necessarily a death knell for all iBuyers, but this shows you what Zillow did wrong. So obviously, if there's issues with Zillow being able to predict pricing, this definitely leads us to question the Zestimate, and plenty of people have been talking about that. But what I haven't heard too many folks mention, and this is a big deal, is the Zillow research. They do a lot of great research on their website, but it does make me wonder when they predict the pricing for next year, and I just used some numbers in a previous video, just how accurate those could be. Now, of course, it was one of several numbers I used for that video, but it does make me wonder how accurate some of this research here as well. So obviously they could have turned to their Zillow research department for help, but for whatever reason didn't, or maybe they did and it was no better. So it just brings into question one more division, one more arm of Zillow. So even if you don't have $2.8 billion to spend on 7,000 properties, here's the area of opportunity. This is a map that shows all of the properties that Zillow currently owns in Los Angeles and Orange County. There's more than other parts of SoCal, but we just have Los Angeles and Orange County up here. So some of these properties are currently listed, but a lot of them aren't. They have not yet hit the market. And additionally, Zillow is going to be closing on more homes. Now, what are some reasons that these probably won't sell to a big hedge fund or a single family rental company? Well, number one, Los Angeles has an eviction moratorium in place with no definitive deadline right now. So that would be a major issue for a landlord to buy a bunch of Los Angeles properties. Additionally, we're talking about a market where values tend to be higher. This isn't Phoenix or Dallas where they own a bunch of other properties. In our market area, these tend to trade at a lower cap rate. The cap rate's the rate of return for an investor. So that means that the rent to value is pretty low. So it's unlikely that many of these will pencil for a hedge fund to buy. So here's the area of opportunity for you. So what we're going to do is for our email newsletter subscribers, there's a link below so you can sign up. We are going to publish the list for all of Southern California. We'll include the addresses. You can comb through there. If anything looks interested and it's not yet on the market, or even if it is on the market, let's reach out and let's get an offer in front of Zillow. We will attempt to do that for you. And who knows what kind of deal you can get, but it's worth a try in this low inventory market if buying right now makes sense for you. So again, subscribe to our email newsletter and let's get you one of these properties and the more that are coming in Southern California. Leave your comments below and let us know what you think. Is every iBuyer out there doomed to fail at some point in time? I want to know what you think. Additionally, make sure you sign up for a free weekly email newsletter. We cover topics like this, plus a whole lot more. And you'll get that list of properties that Zillow currently owns or closes on in the next few months. Thanks for tuning in. This has been Christian Walsh, real estate agent with Wire Associates, and we appreciate you.